Well, Dow stocks failing to stay in the green today, and even a positive NASDAQ failed by a mile to catch up with losses earlier in the week. So what happens on Black Friday coming up? Will retail action pull stocks higher or set them back further? What do you think, gang?
Well, I think, David, you're going to see weakness continue on Friday. It's going to be a while before we get a real picture of retail sales. But people expect good retail sales in the fourth quarter. What's holding down the market is fears on trade. That markets look to the future, not what's happening now or what happened in the past. They're looking to the future. They don't like what they see. And the other thing to keep in mind is we have a NAFTA vote coming up next year if they don't do it this year. Are the Democrats going to pass?
You mean the USMCA vote?
USMCA, NAFTA 2, NAFTA Junior, whatever you want to call it. And but the Democrats going to allow that to go unscathed? So this is bad stuff potentially coming up, and that's what worries the markets.
I don't know. We got a Black Friday shopping discount coming up this week, and I think there's one in the stock market, too. And what was important is, are investors going to see this as one of the dips that is a buying opportunity, a sale, if you will, as the last, 5, 6, 7 in a row have been? Or is this the end of a 10-year bull market and we're going to fall 20, 30, 40% like you do when we enter a recession? And I think investors are timid right now. This is the first time we've seen interest rates actually come back down without stocks going back up, as has happened in the last few weeks of this volatile period we've been in for a couple months here. And I'm watching, too. I don't know. I like to think it's going to come back. I think we're not going to have a recession, but I think tech stocks are going to have a bear market, a full one with a 20% decline.
Well, I got to disagree with my friend Jonah. There is a recession coming. The only question is when, but we're going to talk about that a little later. Look, Friday, the market is looking for any excuse to continue weakening. And if retail sales aren't not just good, but really good, given the economy that we're in, then that will just be one more excuse to push the markets down when that data comes out.
Huh. Yeah, and I also think that the markets are signaling that they don't like these rate hikes. Listen, the president doesn't like them either, and he can tweet about them and say as much as he wants, but the market is going to have a lot more of an impact on these decisions by the Fed than the president's tweets. They clearly, the Fed would like to go back to normalizing rates. The market's not ready for that. But something else, there are some positive things on the horizon other than just... A lot
of positive things.
Yeah, other than just, Black Friday, which is great. I love Black Friday. Gas, I know the president tweeted about gas, and we'll get into that earlier day, but I'm traveling tomorrow. My flight wasn't super expensive. A lot of people are driving. That adds up in the minds of everyday Americans. So there are things that I think will keep us positive through the end of the holiday season.
And the consumer is still confident. Ultimately, consumer confidence, when the rubber meets the road, that's when they go out and buy stuff, and we'll see on Friday whether they're actually going to do it. But, when you have unemployment as low as it is, you have more opportunities. If you don't like your job or if you're not paid enough, you can trade up. That's what this job market is all about. That makes people go out and spend more, doesn't it?
David, you're not going to, there's no data out there that looks bad for the economy when it really boils down. But that doesn't matter because investors right now are in, is this 2000 or 2007 mode? And in 2000, there was no bad signs in the economy. You didn't know there was an underlying bubble. And 2006, 7, it looked pretty good other than the real estate bubble. So we don't really know if the market's leading a recession or not. Again, I don't think we are. But that is the fear. We're looking for signs that, okay, it's just a buying opportunity. This was just a correction. We can come back in. Or, this is the recession that we don't know the signs of until later when these numbers start to get bad that you're referring to.
Well, if we get a trade deal and keep NAFTA 2, NAFTA Junior online and get a deal with China, which I think we will, amazingly, in the next 6 to 8 months, we're not going to go into a recession. And the Fed rate hikes, they've been anticipated for months, the Fed has signaled. I think they'll do one next month just to show they're not kowtowing to the president.
We'll talk about that.
Next year, I think it'll be a different story. But the fact of the matter is, the market does not like this uncertainty. It's starting to affect investing decisions, starting to affect people's behavior in terms of Europe, and you see it in Japan. And so that kind of uncertainty, are we going to really go to the mat with China? And if the president indicated, for example, I was hoping Larry Kudlow would do it yesterday here on Fox, and that is indicate that come January 1st, we're not going to put on the tariffs because we're going to be entering negotiations. So what happens in Argentina in the next few days when that G20 meeting is going to be crucial. If it looks like we're going to sit down, markets will heave a sigh of relief. You'll see a brief rally until we see what actually unfolds.
And it's happening at a time when world trade is contracting. There were stats out today that world trade all over the world, it's not just the U.S. versus China, but it's England's break from Europe and Brexit. It's what's happening in the rest of Europe with Germany and Italy. I mean, when world trade shrinks, so do markets because profit shrinks, right?
But the problem of what we're having with China is I think there's two competing spheres that are vying for the president's attention here. You have Larry Kudlow and the economic guys that would clearly like to make a deal. I agree with everything that Steve just said about how that would be good for the markets. But if you look at it from a national security perspective, and all of the people that don't see that China has made any real concessions on the fact that we are in a legitimate cyber war with them right now, they're not making any concessions on IP theft. You could go through the laundry list of things. So while I think it is the best interest of the market to get a deal, from a national security perspective, I don't think it's in the best interest for us to make a deal yet.
No one disputes China's abuses. The question is, what's the most effective way to do it?
Yep.
Get at them without hurting us, minimize the hurt to us.
Right.
Picking on specific Chinese companies, industries, banks, taking the bank out of a SWIFT system would send a message. Other things like that would get the message across.
But Steve, didn't I hear you say the other day you thought that there would be something coming out of the meeting?
Yes,
in fact, maybe something on natural gas or something like that.
What's interesting is the Chinese have been lowering tariffs on a lot of imports that are not coming from the U.S., which would set the stage for face saving. Say, well, we've done it with others, we'll do it for you, Uncle Sam. But I think the big headline, if they do a deal, which will overshadow everything else, is a big deal on natural gas. They need natural gas. They'd like an alternative to Russia in the Middle East. And a deal like that, you can conjure up over 10 years, hundreds of billions of dollars, the greatest deal of the century. And that would, I think, be the big cake on
And that could get the markets going again, right, gang?
So, well, I want to go back to something Steve said a few minutes ago. I do agree with him that the trade situation is absolutely playing a major part in the weakness in the markets. But I'll tell you what, I don't think we have to sound any alarms about the Democratic Congress that'll be coming in next year and NAFTA or YMCA, as I call it, whatever you want to call it, right? because the deal that we got is really pretty much what the Democrats wanted. It was pretty much expressed by the Obama administration and TPA. This is not going to be a problem.
I want to go back to the hurt comment made by Steve Forbes. But I think, like, ultimately to get something out of China, you have to be willing to take some economic hurt. The reason they've kind of pushed it with so many Democrat countries that have elections, like, all across Europe too, is because every politician's scared of causing, economic. Everyone doesn't want this to happen. So they let them get away with it because they don't have elections in China. And you almost have to whether you're playing chicken or you're really going to have an economic slowdown, you have to have that level of toughness or you're not going to really get a whole lot out of this country. And that's the best case. You might not get anything anyway.
Absolutely true.